All right, ladies and gentlemen, we're back with the pre-market PulseWave report for trading on Sunday, December the 11th, 2022. Okay, so there's a lot going on in the upcoming week. Wednesday is FOMC, and it's the last one for the year. Then on top of that, there's some other government reports and other things going out. I can't recall everything. I just know it's FOMC week. So, and it's the last big trading week before the holidays, which are fastly approaching. So you know what it is. So with that being said, let's jump right into it. So the first chart is gold. You can see here where gold is still in a bear market and you have now been neutralized. You see the light blue line there covering up the green line, which means you have bullish bias, but you have sideways. The market has been totally neutralized. So I'm expecting sideways to slightly higher prices. The market may just drift out and inch a little bit higher each way, but for the most part, the volatility has been taken out of the market. Taking a look at silver. All right, silver is slightly different. Silver has been running and it just hit a new weekly high this past week. And so this one, the door is wide open for a continuation rally. All right, so that's what we're watching. Silver looks like it may still want to run some more. As far as the Dow goes, for the Dow Industrial Average, this is the ticker DIA. You can see the bears are still in control of this market, and it's been consolidating for a couple of days as well. But I still see this market moving lower to start the week off. Next up is the Russell, and you can see here with the Russell, you see the weakness. The bears are in full control, so I'm expecting this one to head lower to start the week off as well. Taking a look at oil, all right, I see the same thing with oil. You can see the market came down more aggressively here, hit the top of the Kumo cloud, bottom of the Kumo cloud at $250 is the next stop, and this is for ticker OIH. Next up, the NASDAQ 100. This is ticker QQQ. And you can see the price action is consolidating here with a downward bias. So I do see it continuing to head lower to start the week off. Looking at the S&P 500, the ticker here is SPY. Again, the bears are in control. The market is not so far away from the first downside target of 385, followed by 375. I see downside to start the week off here as well in the S&P 500. As far as bonds, looking at the long bond ticker TLT, same story. We have a little bit different twist. Not only are the bears in control, but we had a crash alert for trading on Sunday night into Monday morning. So we're going to start the week off negatively on TLT. Top of the Kumo cloud here is the first target, followed by the bottom of the Kumo cloud around the $95 handle. That is very much in play for bonds. All right, let's see here. Let's look at the US dollar. All right, ticker UUP. You can see again, this one's consolidating for a couple of days, but again, a bearish downward bias. So I'm expecting the market to continue to head lower to start the week off there as well. Looking over to the euro. If you're expecting the dollar to go down, that means you're expecting the euro to go higher, but we could have some conflict. What I mean is, of course, the euro is still in a bear market, but we've been under the auspices of a bear market rally, and the bulls are still temporarily in control of the market. However, something interesting happened on Friday, and that is we now have a crash alert for Sunday night into Monday morning, followed by an increase of neutrality. All right, we got that neutrality come entering in the market too. So what this means is I'm expecting that the market's going to drift sideways with a possible downside bias, but no commitment either way. So just crash alert, still got to pay attention to it, but because of this consolidation bar, it means that we may not fall down as much, may fall initially and then just drift sideways with this reading here. Looking at the pound sterling. All right. Pound sterling to start the week off on the long side of the market, but we got that neutrality that has entered the market, and the market has been neutralized all week. So we still got the bullish bias, but we got a neutralized market. So sideways action in that one as well. Just sideways in every market, just about for this week. Um, that's a good question. So the question is Santa coming to the crypto or stock market this year, or did Dick Cheney shoot Santa? That's a good question. And I'm going to tell you why. It's a good question because we have profound uncertainty this week. And I mean profound uncertainty, where no one knows what the information is going to be, and no one knows how the market is going to interpret the information that comes out this week. So we got economic numbers, we got FOMC on Wednesday. So I'm not anticipating that the market is going to do anything until after Wednesday anyway, until after that announcement on Wednesday. So that's what I'm thinking. Now, with that being said, though, here's what the powers that be are wishing and hoping to accomplish this week. And that is they want to give the market a reason to rally. They want to rally the market. They don't want the market going down and ending the year in the red. They wanted to end the year on a high note. Okay. So at some point, I believe that the rally will ensue at some point. But now here's the problem. Time is running out. All right. If the Fed cannot cheerlead the market into a rally by the end of this week, then the downside may have been escalated and moved forward. We're not supposed to really see, crash and burn scenarios until somewhere around the end of the first quarter of next year. Then that's when the gloves come off and people start getting out of the market, exiting positions. But because of uncertainty, that could speed that up, and we could start falling now and continue to fall into the end of the year. I'm going to say and go out on a limb and say that I think they're going to succeed in rallying the market come Wednesday. So depending on how the markets move between now and I'll say Tuesday's close, 4 p.m. New York Standard Time close, that'll tell us pretty much, give us a better idea of where we stand. Now, I don't know what they're going to do on Wednesday. Are they going to have a press conference after the FOMC news comes out? Is he going to be taking questions? Is he testifying before the Senate, Finance Committee? I don't know what's going on, but it could be some information in there to rally the markets. I think they're really desperate to get the rally going, and that's what they want. That's what they need right now. Okay, so this answers your question about the 30 to 45 day forecast. Again, I believe that the first quarter of next year is going to start off with the bear market rally, and then at some point before the first quarter ends, the market will fizzle out, will top out, and start rolling over rapidly. It's even, like I said, it's possible the timetable could be moved up, meaning that the little bit of a rally, bear market rally we've seen so far for this year is that is the rally, and it's over, and they may start to, decelerate quickly to the downside. So a lot is going to be riding on what we hear this week. All right. So between now and Wednesday is going to tell us everything we need to know. For instance, look at the Bitcoin futures thing here. So we have this crash alert on the Bitcoin futures, but I don't have a crash alert on the Bitcoin cash market. All right. If you the way pricing works is it goes like this: equities are better priced than futures. Futures prices are better priced than the cash crypto market. All right. So that's how that goes. That's the hierarchy of price. And so this is the second most reliable. So I'm going to go with this crash alert, but we still got that neutralization that just creeped into the futures, though. See the light blue line? We just went neutral. So any downside could be limited and could be shallow. And I think the market's just going to continue to move sideways for the time being until something happens to change that. And then the last chart today is Ethereum. And here's the Ethereum futures. And it's pretty much the same picture, crash alert on that as well. But we don't have that. If you go to the DEX's watch list, you'll see, if you look at crypto, Bitcoin, crypto, Ethereum, you'll see that there's no crash alerts. We have a sell signal for the Ethereum, but not a crash alert. But under the other reports, it's going to read what it's going to read. So just a lot of uncertainty, ladies and gentlemen. No one knows what's going to happen. We have an idea of what can happen if certain things do or don't take place, but overall, anything goes. Just remember, always look at the prevailing trend of the market. And that's what you see here at the bottom. All right. You see red. So you're in a bear market, which means that all things being equal, the market is going to choose the trend it's already in. And so prices will start going south. Now we're getting toward the end of the year. Window dressing is going to be important. Funds want to look like they've been long the winning stocks of the year, or whatever stocks did better this year. If a fund failed to own those stocks, they'll go ahead and buy those stocks. Window dressing, that's why they call it window dressing. Make it look like you were long those stocks all along, so that if your performance is down, it's not your fault. So that could come into play the final trading week of the year as well. So just some FYI things to keep in the back of your mind as we move forward. All right, just wanted to throw that out there. Just some food for thought. This is uncharted territory. We've had crashes and economic situations in the past before, but that was then. This is now, and we're in uncharted territory. There are things that are in place right now that weren't in place during the '08 situation. This one is very unique because there's a lot of debt. All right. The debt to GDP ratios are absolutely astounding worldwide, not just in the States. So you got to take that into consideration as well. There's a lot of uncertainty. There's so many moving parts right now. We still got the war to deal with. We got the potential additional conflict coming with China. So it's just, no one knows what they don't know. All right, let's end this one. All right, so this is Rent, RENT on the NASDAQ. It just entered into the Kumo cloud. It's in a bear market, and the bulls are in control. Top of the Kumo cloud, we'll call it 375 is going to be the next upside initial target on that one. All right, and NRXP, this is NRX Pharmaceuticals on the NASDAQ as well. All right, this one is also been in a bear market, and you've been under the auspices of a bear market rally. And right now the bears are in control. They've seized control. The market's topped out. You got a temporary top in place, and we're looking for downside production, possibly back down to the 85-cent level on this particular security. And last but not least, SMMT. All right, this one is also on the NASDAQ, Summit Therapeutics. All right, so for this one, also been in a bear market, and you just started this bear market rally. It looks really good, but you got this gap that you created back on the week of December the 6th. So this one needs to back and fill at some point to build a base and foundation for this rally if it's going to be sustained and really get off the ground. But you got this bullish pointer here. So eventually this is going to be also tested and taken out. So between the bullish pointer and the gap created on the week of December the 6th, those are your two key aspects of this particular market. All right. So with that being said, smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.